Welcome out to Tackle Today. This is Coach Matt. Let's get right into it as we got a lot to talk about here today. We got TOST in the news. We got DraftKings in the news. We got wheat and precious metals. We got a secondary pattern development following election. Like I said, we got a little bit to talk about in Tackle today. And I didn't even mention the central bank, which obviously reported interest rates and monetary policy yesterday. But before we get into it, Tackle Trading is the sponsor of the Tackle Today email and video. And if you're looking for an amazing trading platform that will put the education in the application, come over to tackletrading.com and sign up for a free trial membership of the pro membership. You will not regret it. But what we're talking about here today is the technical conversation of the market skyline. And when you are looking at the technical side of the equation here, following a very strong week following the presidential election out of the United States, gap up, run away from the gap. And what you're looking at, if we come in and just kind of look at the overall price action, you're starting to see the momentum slow down just a little bit. You're starting to see that resistance level come in. You can see it a little bit from an intraday perspective. See the big upward movement in price, followed by the not so big upward movement in price, followed by the even smaller upward movement in price here today. That's a concept when you're looking at it from a technical perspective called slowing momentum. And when you're looking at slowing momentum, it's not a caution sign. It's just a little bit of a sign that the market is starting to develop its secondary pattern following the momentum move of the catalyst known as the election here this week. And so you're starting to see it turn over a little bit. Now, are we going to form a high base like we're forming up in IWM? We'll look at that here in just 1 second. Are we going to form a pullback and come back down to the breakout channel in a very clean profit taking environment? I don't know what the actual pattern will develop into. It just shows me, based on the overall technical landscape, that the next couple of days should be a little bit of slowing momentum as we have digested quite a bit of information, and not just from an election this week, but from the central bank this week, 105 earnings reports this week, a litany of important economic reports last week, 165 earnings reports last week. It's been murder's row for a 10-day stretch in the market. And that came to a conclusion yesterday when we had the central bank of the United States report monetary policy. And what the central bank basically stated was they were going to cut interest rates by 0.25. That was expected. The interest rate was 5. They came down to 4.75. And they really didn't give a clear indication of exactly what transpires next. Obviously, in an election week where you have the changing of the guard, you're going to get a little bit of questions on, how is Powell going to handle if Trump wants to fire him. And so it became a little bit of a political situation as well. But for us here, it's more important what the policy statement said and basically what that leads to down the road. And so what we have is the Fed cutting rates by 0.25. And then when you look at the projections for next month, which I do anticipate a little bit more important of a policy meeting next month as we summarize the entire year, update the dot plot going into next year, but you expect another 0.25 cut for next month as well. And so right now we have a current interest rate of 4.5 to 4.75. The expectation as of 1 day after the Fed reported interest rates is for them to cut one more time in December. But then when you start going out a little bit further in January, it looks like they're starting to slow down their cutting cycle. And this is anticipated. We do not anticipate getting cuts every single time the Fed meets. It makes a lot of sense to put this on a 3-month trajectory to have because we're still in an inflationary conversation. We're still in an economic conversation. And the Fed was very clear that the dual mandate was still in effect right now. And so when you're looking at the monetary policy environment next year, there's some uncertainty there from an economic perspective. And so what they're doing, at least what it looks like what they're doing from a projection perspective, is they're looking like they're going to cut every other quarter while maintaining their data dependency language, which Powell hinted at yesterday in the press conference as well. And so we got our cut. Most likely, we're going to get another cut next quarter, next month. But then it does look like the rate of those cuts do start slowing down as the Fed gets into a little bit more data dependency in 2025 itself. Let's talk a little bit about those stocks in the news here today, as the market still has earnings season going on, and we still got quite a bit of stocks to report on from an earnings perspective. Stocks in the news here today were TOST, DraftKings, and Wheaton Precious Metals. These three stocks all had different obvious earnings reports. They all represent different levels of the market as well. TOST is a very, one of those AI watch list names. It does live on the AI gold rush watch list. They came out had a really good report in my estimation. This is following a couple good reports, but specifically last quarter as well had a good report. And now you're starting to see liftoff here to a certain extent. The weekly chart is what you're seeing here on the screen. We'll take a look at the daily chart here in a second. But they came in with a 7-cent beat against a 1 cent expectation, or negative 1 cent expectation. Revenue came in slightly above the expectation. But why the market is really kind of pressing up, and we'll take a look at the technicals here in a second, is because of guidance. They raised guidance up to 352 to 362 million. And so you got a little bit of a hat trick here. I'm not going to give it the hat trick treatment because of the beat on revenue for an AI name. I'd like to see a little bit more there, but it's a good beat on EPS, and raising guidance a little bit certainly does help. And the price action is a gap up with a little bit of sell down behavior. We'll take a look at that here in a second. Now, DraftKings came out with a pretty big loss. They reported a 60-cent loss against expectations of a 42-cent loss. Revenue came in a slight as well. On the revenue guidance side of the equation, they slightly guided to the downside as well. This is not a good report out of DraftKings, but what we're not seeing out of DraftKings is a massive move in the market, which is interesting when you have a negative report and you don't get a negative reaction. That does stand out a little bit. So we'll take a look at their technicals here in a second. Wheaton Precious Metals also comes in. It's been an important gold week, obviously, with gold breaking a little bit of short-term momentum support. Now looking at a little bit of support build. Wheaton Precious Metals, obviously, a little bit volatile in that environment as well. They reported EPS of 34 cents. They met the expectation. Revenue was up 38% year over year, which is really good for a mining stock. But revenue did officially miss. So they have a little bit of a mixed report here. In line on the EPS, a slight miss on the revenue, but really good revenue year over year. This is a walk in the park type of a report coming out of Wheaton Precious Metals, and so don't be surprised when you do in fact see a doji on their chart. Let's take a look at TOST, and I'm going to take a look at TOST from a multiple time frame perspective. The gap here is it looks like a runaway gap or an exhaustion gap. When you have a trend going into a gapping situation, it's either going to be one of those two things. Now, secondarily, after you see the cash open, so you see the gap up, but the cash opens all the way up here at 38.40. You see that sell down behavior. That is profit taking coming from the earnings gap itself. And the ultimate question is what pattern forms here, because there's not a lot you can do outside of just day trading on an earnings day where you have a lot of price movement. You really don't see it from a probability perspective until you see that secondary pattern. And so a secondary pattern is after an overextended move, either to the top side or the downside, and you look at what that next pattern develops. Do we get a gap fill? Do we get an inside candle analysis slowing momentum? Do we clean it up at the top and we get a high base? Whatever it is, this is a company that should be on the radar. They've had multiple good earnings reports in a row. Fundamentally, obviously, we're talking about an AI name, so you're going to be talking about a high valuation company, but this is a growth company. And as long as guidance continues to go up and as long as growth occurs, this is going to be a story. And Toast is 2 consecutive quarters. I want to say 3 out of the last 4 they came in with really good beats. Once again, one of those AI gold rush names is Toast, lives on that watch list. You look at the weekly chart, and this is just a journey here Toast is having. You clip the mid-tier, real good longer duration reversal analysis. Now you're starting to get into the profit on EPS. Look at the negatives, negative, 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 all the way through the consolidation. Look at the positive. EPS is growing. EPS is growing. That is a positive. As EPS grows, price grows. Got a good situation on Toast brewing, no doubt about that. But you would definitely like to see that volatility decline post earnings in a secondary pattern. Now let's talk a little bit about DraftKings, as they covered a little bit here today. Gap down on a little bit of the negative news. However, they recovered very, very strong, and it's had a strong day throughout the day here on DraftKings, fighting up to that overhead at 42. This has to be a technical conversation, as DraftKings did have a slightly negative earnings landscape. Obviously, other things are at play here today. I do not have a positive reaction to the earnings itself. The strong move does not change that for me. But if you are looking at DraftKings, you have that 42 handle right there, which is a pivot formation. You certainly feel like the technical conversation is going to come up into that 42 level, and then see what we have after that. And then the last stock news of the day was wheat and precious metals. And like I said, a little bit of a walk in the park type of a report here, where you have a slight miss on revenue, but revenue year over year was good. You have a slight beat on the EPS side of the equation. And so a little bit of a mixed report. Shouldn't see a lot of price movement in those types of conditions. And we're certainly not seeing that here as well. A little bit of a deeper pullback we got in the gold stocks and the gold mining stocks here. You definitely want to be seeing a little bit of development, but I can tell you from the coaches at Tackle Trading, we kind of felt like that move to the downside on Tuesday was a little bit of an overkill, a little bit of a fight back. It's good to see in the gold stocks and secondary patterns. We know what we want to see here as you clip a little bit of those important support levels as you come down. When you clip the 9, when you clip the 20, you're going to want to see a little bit more development and fighting back up into that overhead, and then a little bit of a high base, clean up that resistance level. A little bit of a king's bed type pattern here would make a lot of sense on wheat and precious metals. And when you look at that weekly chart, not, taking away a little bit of that Tuesday volatility, wheat and precious metals weekly chart looks fantastic here. A lot of support between that rising 9 and that rising 20 on that weekly chart as well. That's what we got in stocks in the news. Let's talk a little bit about the commodity landscape here today as well. When you are looking at the commodities, a lot of the commodities, it needs to cool down. That's kind of the what we're seeing here following the election, following the central bank this week. We're just seeing a lot of volatility in the commodity space, and a lot of that volatility is due to the tremendous volatility we've seen in the currency. In the currency itself, we had a massive upward movement in price on Tuesday. We had a fairly significant downward movement in price on Thursday. You're really seeing some consolidation here on Friday, and it's really testing that 9 EMA on the upward movement in price. 9 EMAs in a momentum condition act as support, and they act as extremely strong support. This volatility needs to simmer down, settle in to give us a better understanding of where the currency wants to move. And thus, on the commodity side, you're going to see a little bit of the same thing. Gold, big move to the downside, trying to form up support right around that 50-period moving average. You would certainly like to see a king's bed, little bit of consolidation. That's all a king's bed is a little bit of consolidation to bring that 9 EMA down, to bring that 20 SMA down, so that we can get a breakout back up above those levels. And so you're starting to see that development here, but you need to see a little bit more. On the silver side of the equation, obviously we're seeing the same type of pattern here, a little bit more volatile. And because it's a little bit more volatile, you're going to need to see a little bit more cleanup work on aisle 6. On the copper side of the equation, extremely volatile, as it's been very sensitive after the Trump election to the volatility due to tariffs on China. What does that specifically look like? How does China fight back? You heard on the move down after the election was strong move to the downside, followed by a strong move to the upside after you saw China come out yesterday and say they were looking to stimulate their market. You're just seeing a lot of volatility here, and you really need to see that volatility settle down. You don't get a massively good read from a technical perspective in times of volatility. Remember, volatility is the kryptonite of technical analysis. We need to see that slow down so that you can understand where true support is, where true resistance is, where the probability analysis goes to. And so as long as you stay volatile here, and we should see some simmering down over the next week or so. But until then, little bit of a stay away on the copper side of the equation. Now let's take a look at the crypto side. Ethereum really looking good here from my estimation. Bitcoin has gotten all the love from a conversation perspective, but ever since that election, here's old Ethereum, the silver of the crypto community, showing you breakout scenarios coming from a reversal type scenario. When you look at that on a weekly chart, looking pretty good, breaking up above those longer duration moving averages, breaking back up above that overhead resistance level right around 2,800. And now you're at 3,000 here, which does have some resistance to it. It's a significant hold number. You got a little bit of a pivot there, obviously chopped between 2,800 and 3,000. That's kind of where you would assume that zone of resistance was. It was a zone of support. It's a zone of resistance. Now you're at the top level there. And so as Bitcoin gets a lot of that love in the market, Ethereum's starting to show a little bit of reversal tendencies as well. Now to the king of the crypto community, obviously that's Bitcoin. Weekly chart looks like it's going to close above these overhead resistance levels, which definitely means any secondary pattern here gets developed. You're going to like that from a breakout scenario. And the strong move that we saw in that weekly chart was really the election move on Wednesday. The last 2 days, you're seeing that consolidation. That consolidation goes a long way in forming up those secondary patterns, waiting for that 9 EMA to catch up to it as well. You look at IBIT here, ETF out of BlackRock that tracks Bitcoin, that they have obviously broken out, forming a little bit of momentum conditions as well. And so the crypto side of the equation looks like it's has a little bit of momentum as we conclude this week's edition of the Tackle Today video. Going to be interesting to see what type of patterns we get on the crypto side coming into next week as well. And if you love the Tackle Today video and it helps you navigate the market and you want to come over and check out Tackle Trading, well, today on Friday, we are putting together the amazing Tackle Trading newsletter, which takes into account 5 different sections in it. You get a technical update and video, earnings update. You get a sector rankings video, as well as the sector rankings, what sectors get upgraded, what sectors got downgraded. You get a global markets video and a write-up to help you understand the global markets, what we're seeing, what we need to see next. You obviously also get the traders report, where you get access to multiple different videos, both from an educational perspective, but you also get the watch list of the best technical setups going into next week as well. Our pro members get access to those reports, and you can get access to those reports as well just by signing up for a free 15-day trial of the Tackle Trading Pro membership to get access to all of that great content, great education, great application. This is Coach Matt for Tackle Trading. Hopefully you guys have a wonderful, wonderful day. And let us know if you need anything by emailing us at team@tackletrading, or you can come over and join our Tackle Trading Discord channel as well.